Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now it's been quite a slow day once again in the markets. I do think people are very much now looking ahead to tomorrow's speech from Janet Yellen at Jackson Hole. Now we have had plenty of economic data today and it has had a bit of an impact on the markets, but just to look through the markets suggests nothing's really changed. European equity markets have ended the session a little bit lower, but again most of the European indices have just continued along the same pattern of the last couple of weeks of basically trading sideways. The FTSE is edging lower at the moment, but I think that's being driven by the rebound that we've seen in the pound over the last week or so, which is therefore weighing on the index in the same way that weakness in the pound after the referendum helped support it. In the US, we're very mixed at this moment in time. We're currently just after the end of the European session as well, so those markets are now closed. Elsewhere, we're seeing a little rebound in oil, but nothing to write home about. In the currency markets, again, we're not seeing any overly significant moves right now. As I said, I really do think this is kind of a wait-and-see mode ahead of the Jackson Hole speech tomorrow, which was always going to be the headline event of the week. I'll look at these data points now, and we did see the IFO number actually have a little impact earlier on in the session in Europe. Europe did start on a weaker footing, so it was already headed south, but those weaker IFO numbers across the board, the current assessment, expectations and overall business climate was quite disappointing. That did spur another leg lower in Europe earlier on in the session. Does potentially suggest that it's not all hunky-dory in the euro area. We've talked about how resilient the eurozone has been to the Brexit vote, but we've got to remember this is the immediate aftermath, and we've got to give it at least a few months to try and determine what the overall impact is going to be. The reality is it's going to be at least a few months, if not a little bit longer, before it starts to really have an impact on the economy, before, particularly in the UK, but before any detrimental impact is felt as well in the euro area. The US is where we've had the bulk of the data from today. The durable goods orders rebounded quite nicely. It's been a disappointing year for durable goods orders. And we needed this rebound. Really, there was going to be questions really over what parts of the economy are actually improving if we started to continue to see, things like durable goods orders disappointing on a monthly basis. The unemployment situation, of course, in the US is very good. The inflation situation is improving, but if things like durable goods orders are disappointing on a monthly basis, then you've got to wonder if companies aren't investing in the longer term. Then how can we expect this recovery to be sustainable? But we've seen a good rebound this month. Hopefully that will continue in the months ahead, and it will give the Federal Reserve some comfort if they are seriously considering raising rates this year. The jobless claims was slightly better than expected, but largely in line. Services PMI was disappointing, and again the trend in the services PMI has been very disappointing since the start of the year. We did seem to take a dip down in the outlook for the services sector back in January when we had the yuan devaluation, which really sparked a lot of fear in the markets and sparked a big sell-off in the markets. And since then, the services sector, in terms of confidence at least, hasn't really recovered, and we've now had 2 quarters of weak growth in the US. And if this services number is anything to go by, the third quarter isn't looking much better. And again, that is going to be a concern to the Federal Reserve, that not only have we seen weak growth in the first 2 quarters, we could be seeing weak growth in the third quarter, and the outlook in terms of the services sector isn't improving. So I do think this is going to be a little bit of a concern. It'll be interesting to see what Yellen has to say in her speech tomorrow. Like I say, that's the key event this week. That's the one thing people are really focused on. A look at the CME Group FedWatch tool, and you can see that markets are increasingly pricing in December, though, despite the fact that that data is a little bit weaker. We have had comments, of course, throughout the last week or two from different Fed officials, and a lot of them do seem to be saying that a rate hike this year is or a rate hike soon would be warranted, although we have had a lot of mixed messages as well, depending on the Fed officials that we're talking about. Today we did hear from Kaplan, who suggested, in line with some of the recent commentary we've heard, that a rate hike this year would be warranted. The case is strengthening. Kaplan actually said that this is Robert Kaplan, I should say, the Dallas Fed president, and he said that the case for strengthening for a rate hike. The case is strengthening for a rate hike soon. So again, the message is very much in line with what we've had from a few other Fed officials, such as William Dudley and Stanley Fischer, among others as well. So I do think this is going to be the key focal point now for the rest of the day. I do think the markets could potentially remain a little bit quieter, and everything really now is just building up to this big decision tomorrow. As always, check out the OANDA MarketPulse website for a lot more great analysis from the team. Kenny, of course, over in Israel, Dean and Alfonso in Toronto, and also Jeffrey and Stephen in Singapore, and of course myself also. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.